in 2018 ISC question paper. So the first question had been asked for 2 marks. The question says that give the adjusting entry and closing entry for interest on loan taken by a partner from the firm when the firm follows the fluctuating capital method. So, in this question, two things are important to note. First, the interest on loan taken by a partner means the firm has given a loan to the partner, so the interest is an income for the firm. Now, second, till date, we have studied there are two methods under which capital account is prepared in a partnership firm. First is the fixed capital method, and the second is the fluctuating capital method. Under fixed capital method, we know that there are two accounts maintained for each partner. One is the capital account and second is the current account. Only addition or withdrawal from the capital is routed through the capital account under fixed capital method. All other entries such as interest on drawings, interest on loan, remuneration, interest on capital, etc. are routed through the partner's current account. Whereas under fluctuating capital method, only capital account is maintained. All the entries with respect to the partners, may it be salary, interest on capital, addition to capital, etc., are routed through the capital account itself. So, in this question, we have to do the entries considering fluctuating capital method. Now let us look at the entries. We have to pass two entries. First is the adjusting entry. What is an adjusting entry in accounts? An adjusting entry is a journal entry by which the expense or income is recognized for the period. Now this is an income, so interest on loan accounts will be credited. It is receivable from the partner, therefore partner's capital account is debited. The entry is partner's capital account debit through interest on loan account. Second entry is the closing entry. At the year end, all the expense and the income ledgers are balanced and the closing figures are transferred to the PL account to determine the income or loss, revenue or loss for the year. Therefore, the closing entry will be interest on loan account debit to profit and loss account. Now, this is an interest on loan. Therefore, it is provided via the profit and loss account and not profit and loss appropriation account. It is not an appropriation of profit. It is a charge against the profit. It is a revenue for the firm. Therefore, it is routed through profit and loss account. Sometimes students do make an error that since it is receivable from the partner, so it should be routed through profit and loss appropriation account. But this is not the case. So there are three things you should remember while doing this question. First, the partner has taken a loan from the firm, so the interest is an income and not an expense. Second, fluctuating capital method is followed, so the entry is routed through the capital account and not the current account. And third, interest on loan is not an appropriation of profit, it is a charge, so it has to be routed to the profit and loss account and not the profit and loss appropriation account. The next question had been asked for 8 marks in 2018. In this question, we have to prepare the profit and loss appropriation account for the year ended 31st March 2017. So it is given in the question that there are two partners who share the profit and loss in the ratio 3:2. Their fixed capitals have been provided. The partnership deed provides the following: interest on capital at the rate of 10% per annum, interest on drawings 4%, salary of 2,000 per month to Asif. Ravi is entitled to a commission of 5% of the correct net profit of the firm before charging such commission. Asif is entitled to a rent of 3,000 per month for the use of his premises by the firm. The net profit has been given as 4 lakh rupees and both the partners withdrew 5,000 at the beginning of every month for the year. So let's begin the solution. First, every account has to have a proper heading. So we are preparing the profit and loss appropriation account for the year 2016-2017. Very often, the students forget to write the heading, because of which they lose a mark in the exam. So it is very important to write the correct heading. So amount, particulars amount. So the first entry, the profit for the year is given as 4 lakh rupees. So by profit and loss account, the net profit is 4 lakhs. Now, it is important to note that it is given in the question that Asif is entitled to a rent of 3,000 per month for the use of his premises by the firm. This rent has not been provided in the net profit, so we'll have to adjust it. Now, students often make the mistake, as I've repeated, that any payment made to or received from the partner, the students often route it through profit and loss appropriation account, thinking that the transaction is with the partners, so therefore profit and loss appropriation account should be used. But that is not the case. The rent is used for the use of the rent is paid for the use of premises of the partner. It is a charge against the profit, and therefore it should ideally go to the profit and loss account and not an appropriation account. Therefore, we'll adjust the rent in the inner column itself. That is, the rent is 3,000 per month, which is 36,000 per annum. So we are going to take out the adjusted net profit to the outer column, that is 3,64,000. The first is given that the partners are to be allowed interest on their capital at the rate of 10% per annum. So this is an expense to interest on capital account. First is Asif and second is Ravi. So the capital of Asif is given as 6 lakh rupees and Ravi is 4 lakh rupees. The interest rate is given as 10% per annum. So we have 60,000 for Asif, 40,000 for Ravi, total 1 lakh rupees we are going to take to the outer column. The next entry is they are to be charged interest on drawings at the rate of 4% per annum. The drawings is given as both the partners withdrew 5,000 at the beginning of every month for the entire year. So, if the partners withdrew, say, at the beginning of April, 5,000, then beginning of May, 5,000, then June, 5,000, and so on. So, in April, the interest will be provided for 12 months. For May, interest will be provided for 11 months. For June, 10 months, and so on. Therefore, we are going to take an average of this. You can also calculate as 5,000 into 12 months into 4% and calculate the interest on drawings for each month separately. But you can just take an average of all this, that is 12 plus 11 plus 10 plus 9 plus 3 plus 2 plus 1 divided by 12, which will give you 6.5 months on an average. So the interest on drawings will be calculated as 5,000 per month into 12 months, giving us 60,000 rupees into 4% is the interest rate for an average of 6.5 months, giving us 1,300 rupees. So by interest on drawings account, we have Asif 1,300 and Ravi 1,300, giving us 2,600 for the year. Next we have Asif is entitled to a salary of 2,000 per month. So two partners, two salary account. Asif, 2,000 per month into 12, giving us 24,000 rupees as Asif's salary. Next, it is given that Ravi is entitled to a commission of 5% of the correct net profit of the firm before charging such commission. So, to commission account, Asif, Ravi. So, the commission is 5% of the correct net profit. So, the correct net profit is 3,64,000. So, 5% of 3,64,000. So, this gives us 18,200 rupees. The next adjustment is a rent, which we have already adjusted, the net profit drawings. So now we have adjusted all the figures as given in the question. So the last entry is two partners capital account profit. So Asif and Ravi. The proportion is 3 is to 2 as given in the question. So the total profit for the firm is, so we balance it, we're getting 3,66,000 on the credit side. So 3,66,000 on the debit side gives us a total profit of 2,24,400. We are going to divide this in the ratio of 3 is to 2. So 2,24,400 into 3 by 5 is assets profit, and 2,24,400 into 2 by 5 is Ravi's profit, giving us 1,34,640 for Asif and 89,760 for Ravi, which makes it 2,24,400 rupees. So with this, we finished this question. In this question, the few important things to note are, first of all, the heading. It is very important to mention the heading correctly in the exam. The next, the rent is not an appropriation of the profit, it is a charge against the profit. So it will be adjusted with the net profit carried for the year, and then the actual profit is carried to the outer column. This entry is very important because if you do not do this part correctly, you will calculate the commission on 4 lakh rupees instead of 3,64,000. So your commission amount will come to be incorrect. The third is the interest on drawings. It is given that a fixed amount is withdrawn at the beginning of every month. So the drawings interest is calculated for an average of 6.5%, 6.5 months, which is 1,300. This calculation is very important. So there were total 3 to 4 things important in this question. First, the heading. Second, the adjustment of rent against the net profit so that you get the correct commission account as well. And the last is the calculation of the interest on drawings. Now let us look at the next question. This question was asked in the exam for 4 marks. So it is given that after adjusting for the drawings and net profit for the year, the capital account balances of Amar and Harsh were 20,000 rupees and 30,000 respectively. However, it was subsequently ascertained that interest on capital at the rate of 12% per annum was not taken into account while arriving at the divisible profit for the year. During the year, Amar had withdrawn 2,000 rupees and Harsh's drawings were 1000 rupees. The net profit for the year amounted to 15,000. The partners shared profit and losses in the ratio of 3:2. You are required to pass the necessary journal entries to rectify the error in accounting. So normally when we do the question, we are given that the partner's capital account at the beginning of the year is say 100 rupees. During the year, the drawings were say 20 rupees and interest on capital is given at 10% per annum. So we would have calculated it on 100, giving us 10 rupees as interest on capital, and profit adjustment, say after all the adjustments we get a profit of 5 rupees. So we calculated 115 and to balance carried down would have been 95. Now what is given is that this entry of interest on capital had not been done. We have been given this balance carried down figure without this entry. We have been given the drawings amount and the profit amount. So first we'll have to calculate what is the opening capital balance. Now why is that important? We have been given that 20,000 is the balance of Amar after accounting for the drawings and profit of the year. But 20,000 is a balance at the end of the year. Interest will not be provided on that balance. Interest on capital is provided on the opening balance of the partner. So it is important to calculate the opening capital. So the first working in this is the calculation of opening capital. So we have particulars, Amar, Harsh, particulars, Amar, Harsh. Now it is given that the drawings for the year for Amar is 2000 rupees and for Harsh it's 1000. We've been given the closing balance, that is to balance carry down 20,000 for Amar and 30,000 for Harsh. It is given that the net profit for the year was 15,000 rupees. Now this interest on capital had not been accounted for then. That is why the entire 15,000 profit would have been divided amongst the partners in the ratio 3:2. So by profit 15,000 will be divided in the ratio 3:2, giving us 9,000 for Amar and 6,000 for Harsh. Now we have given all the adjustments, effects to all the adjustments in the capital account. So if we balance the figures account, we'll get the opening balance, that is a by balance brought down. So that will be 20,000, 31,000 is the total. So the opening balance will be 13,000 for Harsh, sorry 13,000 for Amar and 25,000 for Harsh. Now this is a net profit which had been divided amongst the partners, which is incorrect because if we prepare the profit and loss appropriation account, this is working note number 2, profit and loss appropriation account for the year 2016-17. So particulars amount, particulars amount. We have by PL account the net profit of 15,000 rupees. This entire 15,000 had been divided amongst the partners, which is incorrect. We also have to account for by interest on capital, sorry, to interest on capital, Amar and Harsh. Now we've got the opening figures, that is 13,000 is the capital of Amar and 25,000 is the capital of Harsh. Interest on capital is provided at the rate of 12% per annum. So for Amar, the interest amount will be 13,000 into 12%, and for Harsh, it will be 25,000 into 12%. So we get 1560 is Amar's capital interest, and Harsh, it is 3,000, total of 4,560 rupees. So the balance, so the profit that will be divided amongst the partners will be 15,000 minus 4560, giving us 10,440. So two partners capital account, Amar, the ratio is 10 3 to 2. So 10,440 into 3 by 5, and Harsh is 10,440 into 2 by 5, giving us 6264 is Amar's profit and 4176 is Harsh's profit. Now we are going to see what the entries are. So first of all, an incorrect profit of 9,000 and 6,000 had been credited to the partner's capital account. The correct profit is 6,264 and 4,176. So first, we are going to reverse the incorrect profit. Now, for rectification of any errors in the profit and loss account, we make the profit and loss adjustment account. So the first entry will be rectification of the incorrect profit credited to the partners. So when the profits were credited, we had credited the partner's capital account. Now we are going to debit it. So Amar's capital account debit 9,000. It is very important to maintain the format because the main question is about the journal entries. So Amar's capital account debit, Harsh's capital account debit, 6,000 to profit and loss adjustment account 15,000 rupees. Every journal entry must be accompanied by a proper narration. So being incorrect profit cancelled. Now the next is we had not provided the interest on capital for the partners. So we are going to provide this interest on capital. So the second entry is interest on capital account debit 4,560 2. Amar's capital account 1560. 2. Harsh's capital account 3000 rupees. The narration being interest on capital not credited earlier rectified. Now this is the adjustment entry. That is, we have provided for the interest on capital. We will have to pass the closing entry as well. Now for the year, the profit and loss account has been closed. So because of that, we had prepared this PL adjustment account. Therefore, the interest on capital account ledger will be closed by crediting the balance to by debiting the balance to profit and loss adjustment account. So the third entry is profit and loss adjustment account debit 4560 to interest on capital 4560 being interest on capital transferred to PL adjustment account. Now the last entry is we had rectified yet reversed the incorrect profit that had been credited to the partners. Now we are going to make the entry for the correct profit. So profit and loss adjustment account debit. We had calculated the correct profit as 10,440 to Amar's capital account 6264 to Harsh's capital account 4176. So the narration is being correct profit credited to partners capital account. So this question was for 4 marks. In this question, some important things to note are we have not created the profit and loss account, created or debited the profit and loss account or profit and loss appropriation account in this case. We have created a separate account that is a PL adjustment account. Oftentimes, students make this error that instead of the adjustment account, they route the transactions to appropriation or the normal PL account, which is incorrect. The books have been closed, therefore all rectification entries are done through the adjustment account. Then next, the second entry, that is the interest on capital account debit to the capital partner's capital account, is done by the students correctly, but they often forget to pass the closing entry. We have to close the interest on capital account by transferring the balance to the profit and loss adjustment account. Only then will the PL adjustment account tally. So this entry is often skipped by the students. So we should never forget to do the closing entry. And one more error that the students might commit is that the capital balances have been given in the question as 20,000 and 30,000. So sometimes students calculate the interest on these figures as well. They forget that this is a closing figures and not the opening balance, and the interest on capital has to be calculated on the opening balance. So oftentimes this first working is skipped by the students. I hope these solutions are clear to you. If you have any doubt, you can post them in the comment section below. If you like the video, do share and subscribe. Thank you.